Hello everyone, it's Steve with Aptera Owners Club. The video I did a few days ago about the SEC filing from Aptera made some people get the impression that I thought that Aptera was doing worse now than they were in the past, and that's absolutely not what I think. There was a lot of this kind of boilerplate language talking about all the risks, and people have to just understand these SEC filings are kind of your like a CYA documents where they try to tell you all the bad things that can happen so that you don't go and sue them afterward for misrepresenting themselves. They'll say, yes, we told you we could fail. We told you it was a competitive market. We told you that the finances were an issue. So basically, they try to make things look, uh, you know, cover all the bases so that you can't go back and say that they lied to you about anything. And that's why it sounds pretty negative, but I mean, it's just this is how all these SEC filings are. They just like to cover their butt basically. But compared to a year ago or a year and a half ago, I think Aptera is in a much better position. And if you were willing to invest in them a year or two ago, in terms of their ability to produce a vehicle and actually become a viable company, I think it's more likely now than it was a year and a half ago. Now, the only issue is the price that they're offering the stock for is much higher now than it was a year and a half ago, mainly because they are in a better position than they were a year and a half ago. Because, well, what are all the things they've done? They've made beta vehicles, they've tested them, they've started making moves to get manufacturing going. They've got supply agreements with Yazaki and Cherry Automotive and a bunch of other places. They've acquired interface companies and they've hired supply chain specialists and they've leased manufacturing locations. So they've made a lot of moves that put them much closer to getting into production. So they've made a lot of progress. So the fact that this SEC filing sounds a little bleak isn't because they're doing worse. They're actually doing much better than they were a year and a half ago. However, remember that back then you could pick up shares of Aptera for, I think when they started off on WeFunder, it was less than $1 a share. And then I think I got in at the $3.80 level. And if they were selling it for $3.80, I think I would go more in myself. Now at $10 a share, they're valuing their company at around $600 million. And you have to decide for yourself if this thing was always a very high risk, high reward proposition. There was always a high likelihood that this company does not make it because most startup companies don't make it. That's just the statistics. So there was always a chance of that, and then there was a chance if they made it that you were going to do quite well. And so, but right now they're like at $3.80 a share, they would be valuing themselves at, I think, roughly a little around 200 million. And I think they're probably worth. I personally think they're worth more than that, especially if they make it to production. But let's say they make it to production at $600 million a share. Let's compare them to some other similar companies and see what their market shares are. So like Canoe, which is, they were about to go insolvent. They were about to run out of money. They still have not produced a vehicle. So they're sort of, I think they're a little bit farther along than Aptera is, and they were about to run out of money and close shop, but Walmart bailed them out. Walmart put in a big order, gave them a cash infusion, and they might make it. And they're worth $1 billion. Okay, so, and then there's Fisker. Fisker supposedly has a market capitalization of 2.75 billion. They've also never produced a vehicle. But people have some confidence that they can produce a vehicle, and they are producing a small SUV, which is a very popular segment. And so people are thinking that they're going to be doing well. Now, if Aptera reaches Fisker valuation, if you bought at $10 a share now, I mean, you could theoretically kind of quadruple your money or quintuple your money. So 400-500% returns. That's really good. That's really good. And then there's Lordstown Motor. So their market capitalization is the same as Aptera is valuing themselves now. And Lordstown, I think they have issues because they're fighting in a segment against the Ford F-150, and I don't see why anyone who's looking for an electric truck would pick an electric truck from a startup company when an electric truck from an established, well-known company is actually a very good truck and is available on the market now. So I think they are in a very tough market segment. I'm surprised that they're still valued this high. I personally think Lordstown is going out of business. I think they're gonna go bankrupt. That's my guess. Again, disclaimer: I'm not a finance professional. Don't take any of this as financial advice. It's not. It's just entertainment, and you do what you want to do with your money. Okay? This is just me rambling. Um, then there's Sono Group. They make the Sono Scion, which is the other SEV, solar electric vehicle. So there's Sono Motors making the Sono Scion, and there's Aptera, and then there's the Lightyear Zero. Okay, so those are the three major solar electric vehicles right now. So Sono Group is a little bit farther along than Aptera, and they are closer to production than Aptera is. They have a 5-passenger vehicle that fits pretty well in the European market, and their valuation is half of Aptera's. So you have to ask yourself, do you think Aptera is going to go like Sono or better, like Fisker? Because if Aptera ends up like Sono, you're losing money at this point if you go in at $10 a share. If it goes like Fisker, well, then you're making money. Then look at Arcimoto. Obviously, I think that Aptera is a much better product than Arcimoto, miles better. But Arcimoto is actually delivering cars, has actual revenue. They're not cash positive, but they're actually delivering cars and making cars, not very quickly. But their market capitalization is only 100. And then Electromechanica Solo, they are also actually delivering cars. Their car is far inferior to the Aptera in every way, I think. But they are actually delivering a car, and so they actually have revenue, and they're less than 200 million. And then, of course, you can look at companies like Rivian and Lucid. They're both valued at $30 billion. Now, if Aptera somehow got a $30 billion valuation, well, you've just made the single best investment ever if you go in at $10 a share. But I mean, I think that's highly, highly unlikely. Um, I think we'd be lucky if we got to Fisker valuation. Okay, anyway, a few people are in the comments were like, well, Aptera is a scam. A couple of people said that, and that's like a fraudulent scheme, and that's absolutely not the case. You know, if you were running a scam where you were trying to defraud people, you would not do what Aptera did. So, like, imagine you are running a scam. What would you do? You basically would, if you're running a scam, you would make nice looking prototypes. You would take them to every show possible. And then you would take in as many orders as possible. And then you would go IPO when the market was hot. So they should have gone IPO back in November of 2021. And you would not hire engineers because you don't ever intend on making the vehicle. So why would you hire engineers? You would not hire a supply chain specialist as your like like Pablo Ucar. You would not hire this guy. You would not get into supply chain agreements. You would not waste your money buying out an interface company, and you would definitely not waste $3 million leasing assembly locations. That's just money that you could have kept yourself. So they're spending a ton of money hiring all these engineers, getting supply chains, testing. You would never make a beta vehicle. Why would you, if you were running a fraudulent scheme, why would you make a visually unappealing beta vehicle to test vehicle dynamics? There's just no, because you're not planning on making the vehicle. Remember, this is a scam. So there's nothing about this that says that they're a scam, that they're trying to defraud people. No, they're spending money with the intent to develop a vehicle and produce a vehicle. That is very clear. Now, is it possible that you'll lose money if you invest in them? Absolutely. Is it possible that they never make it to production? Yes, absolutely. Is it because they were fraudulent? Absolutely not. It's because the market is hard. capital is hard to come by. The economy is bad. Starting a new company is extremely difficult. And getting capital and engineering a car, these are all very hard things. And when you try hard things, sometimes you fail. Um, there's a very interesting article because people say, oh, Chris Anthony sometimes says things that's like he's lying or, not being truthful. This is not something that just Chris, it's like every entrepreneur does this. They bend the truth. They try to present the best thing forward. And that's because you have to almost delude yourself because intellectually that most startups fail, but you have to believe that your startup isn't going to fail. And so people say that good entrepreneurs and good founders have a reality distortion field. So that's what they have, and that's kind of what all startup CEOs do, and that's to be expected. And I think there's a couple of interesting quotes from Elon Musk, and I don't particularly like him personally, but no one can deny that he is a very successful and very smart guy. So I think there's some interesting things. Like one of his obviously famous quotes is that prototypes are easy, production is hard. We've all seen this. So this is why most car companies don't make it past the prototype stage. And there's a very interesting thing where he says that starting a company is kind of like eating glass and staring into the abyss. So I think this is a very interesting video. So I thought it might be worthwhile watching it.
But I mean, there's a friend of mine who's got a good phrase for doing a startup. It's like eating glass and staring into the abyss. So if you go into it expecting it's going to be just fun, you will be disappointed. It's not. It's quite painful. It's much easier to get a job somewhere. Much easier, much less stressful. You'll have more time for other things.
But would you be happier?
It depends on who you are. Would I be happier?
Yeah.
No, I wouldn't be. I'd be unhappier. It's really like if you're sort of wired to do it, then you should do it. But not otherwise. It's not going to optimize your leisure time or anything like that. It's going to be extremely difficult and stressful. So you must feel compelled to do it. Let me put it this way: if you need inspiring words, don't do it.
Yeah, so basically starting a company is like eating glass, staring into the abyss. It's really hard, it's really painful. If you need inspiring words to do it, don't do it. I think that's a great quote. Okay, so what is Aptera's out of this? Like, what do they need to do to make it to production? So, right now the problem is they've hired all these very talented people, and these talented people need to get paid. And every month that goes by, we are paying for all these talented engineers and other people, and we're paying for supplier chain agreements, and we're paying for leases on buildings. And they need to produce this car as soon as possible. So they are on kind of a time crunch because time is basically, as more time goes by, they're just burning more money. They need to find, like they said in their SEC report, at least $50 million. And where are they getting these $50 million? There's a couple of places they might be getting them from. One is they started a preferred investor round. And if it's possible, maybe they get, and remember what the preferred investor, accredited investor is. And accredited investor is someone who makes an annual income of at least 200,000 or 300,000 for joint for the last 2 years with the expectation that it will continue, or if they have a net worth exceeding $1 million, not including their primary residence. Okay, so you know what though? These people are not that wealthy, right? Someone who's making $200,000 a year, I mean, they're doing well. Let's be honest, but they're not super wealthy. It's not like they can just throw money away. These people are going in with the expectation of making money, and they can't afford to lose a lot of money. So super risky investments probably aren't very attractive to them. They don't have that kind of money to just throw around and be like, oh, you know what? If I lose $100,000, not a big deal. It's not no problem. But theoretically, they could find 1,000 people that invest $50,000. They would get that would hit their $50 million mark. I personally see that as sort of unlikely. I don't think that they're going to find 1,000 people that have the risk tolerance to put up $50,000 on a venture that's still, even now, as far along as they are, is still a risky proposition. Okay, so that's one. They're trying to do this, and maybe they'll find a few people that do it. I hope they succeed with that because, I want them to make it to production and I want a car. And I want my investment to be worth something as well. And unless they make it to production and go IPO, my investment is worth nothing. What's the other thing they can do? They've applied for this advanced technology vehicle manufacturing loan. I did a video about that previously. They've only given this loan out to about 4 or 5 companies. One of them failed. And one of the people they gave the loan out to was Tesla. They gave Tesla almost $500 million as a loan. That was obviously very successful, and Tesla really needed that to survive. Without that, they probably would not have survived. One good thing about it is that the recent Inflation Reduction Act that passed on Tuesday. Now we know that it does not give any tax credits to Aptera. However, it did something that might help Aptera kind of peripherally. And what it does is it provides an additional $3 billion in funding to the Advanced Technology Vehicle Manufacturing Loan. So it used to be 15 billion, now they have 18 billion. So Aptera just needs 50 million of that. And I think there's a decent chance they might get that. So if they get that loan, that would be really good because it would give them working capital. And I think they've applied for 150 million, not 50 million, but they applied for $150 million loan. So if they get $150 million loan, that lets them scale up production much quicker. And that'll be helpful. And also the good thing is it doesn't dilute shares. So it doesn't dilute shares, and they just need to pay back this loan. What's the other option? The other option is that they could get some help from guys like this. Bill Gates, Bill Gates, Jeff Bezos, Elon Musk. These guys all have hundreds of billions of dollars, and $50 million to them is probably like $5 to us, or $10. It's like they could lose $50 million and it would barely register in their bank account. It's like a tiny percentage of their net worth. And these guys are all very interested in climate change. So these guys, okay, so obviously this is an old article from Forbes. Jeff Bezos is no longer number one. That's Elon Musk. Elon Musk is worth about 280 billion, I think, at this point. But all of them are very interested in climate change. All these guys, Zuckerberg, Buffett, Bill Gates. Bill Gates even wrote a book called How to Avoid a Climate Disaster. So these are the kind of guys, they have more money than they need. It's like no one needs more money than they have. So at this point in their life, they're not out to make more money because you just can't spend this kind of money on yourself. You just can't. They're at the point where they have all the money they're ever going to need, and they want two things. They want power, or they want legacy, or they want to do something worthwhile. And so getting one of these guys to give $50 million to something that they believe is worthwhile would be something that would fit their brand. However, here's the issue. These guys probably get like 1,000 requests to invest in some company that's doing some quote good thing like on a daily basis. So is Aptera such a compelling product that it can cut through all that noise or not? That's the thing. I think if any of these guys believed in Aptera, they would 100% invest in it. Not because the risk doesn't bother them, I don't think. Like if they put in $50 million and they lose it, no big deal. They just can't do that like 1,000 times, right? They can't just lose $50 billion. They can lose $50 million, but they can't lose $50 billion. So those are kind of the three options. They can either find small investors to make $50 million. I think that's a tall order. They can get the ATVM loan. I think that's likely, uh, possibly likely, or they can get someone who with a lot of money to invest in them, who doesn't really, where the high risk doesn't really bother them. And that seems like an easy proposition, but I think it's very hard because these guys are probably inundated with requests by small companies and startups to invest in them. So, anyways, I didn't want to give people the idea that I thought that they were in a worse position now than they were a year or two ago. I think they're not. It's that their valuation is higher now, and everyone has to decide for themselves whether the valuation they're asking for now is worth what they feel like the company is worth. If you feel like this company is going to make it and get to Fisker levels of valuation, you should 100% do it. If you feel like they're going to make it to production and they're going to reach Sono group levels of valuation, well, you shouldn't do it because you're going to lose money. Because they're worth half of what Aptera is valuing themselves at. So that's the question that you need to ask. Okay, well, I hope that this was helpful to you guys. Thanks for watching. Thanks as always to our supporting members, and I look forward to your comments. Have a great day, everyone.